Welcome back. If you're tracking the twists and turns of the global plastics market, you are in exactly the right place. Today, we're jumping straight into a highly anticipated explainer, breaking down PolymerBazaar's most awaited weekly report and future trend analysis for the polystyrene market in late June 2026. We are going to map out exactly what's going on with GPPS, HIPS, and EPS across the major global bazaars. But more importantly, we're going to look at how these specific trends should be dictating your upcoming procurement strategies. So, let's get into it. All right, let's dive into our agenda for this explainer. First, we'll look at the overarching global demand slump. Then, we'll contrast the pricing reactions in the US versus Europe. Third, we'll check out the unique dynamics in Turkey and China. Fourth, we'll do a deep dive into the Indian bazaar. And finally, we'll wrap up with an actionable purchase recommendation.
Starting off with Section 1, the global demand slump.
So looking at the big picture of this late June report, we're witnessing this pervasive worldwide phenomenon of weak demand, which really brings us to a massive question. Why is the global polystyrene market seemingly holding its breath right now? Literally everywhere we look, buyers have adopted this incredibly rigid wait-and-watch stance. They absolutely aren't rushing to build inventory, they're just sitting on the sidelines. And as we unpack the regional data, you're going to see exactly how this collective hesitation is rippling through the entire global supply chain. Moving right along to Section 2, let's compare US versus Europe pricing.
Let's see how this global slump translates into real-world pricing. It's actually a tale of two markets. In the US bazaar, prices are actively dropping. Those trading hubs are taking a hit from dull demand locally, but they're also feeling the pressure from quiet Asian and European bazaars, forcing them to drop prices just to stimulate movement. But then look over at the Europe bazaar. Over there, prices are stubbornly unchanged. European buyers have locked themselves into a super strict holding pattern, purchasing absolutely nothing beyond what is required for their daily operations.
Now, what's really interesting about the US market is the sheer magnitude of these price drops. GPPS took a hit, falling $50 to land at $1,650 per metric ton. HIPS saw that exact same $50 drop, resting at $1,705 per metric ton, and both of those are on an FS Houston basis. Meanwhile, EPS took an even steeper dive, dropping $70 down to $1,575 per metric ton on a CFR US West Coast basis. This just proves that the global dullness is directly forcing these numbers down. US sellers are desperately trying to find the floor in a very, very quiet market. Compare that to the situation in Europe on an FD Northwest Europe basis. GPPS is sitting at 2,000 euros per metric ton, HIPS is at 2,100 euros, and EPS is at 2,285 euros. Every single one of these prices is completely unchanged from the previous period. Because buying is restricted strictly to regular factory consumption, there just isn't enough trading volume or competitive pressure to force a price revision. It's a textbook illustration of a market stuck in a holding pattern. All right, Section 3, Turkey and China dynamics. Things get genuinely dramatic when we shift our focus to the Turkey bazaar. Just look at these steep declines. GPPS plummeted by $150 down to $1,520 per metric ton. HIPS also dropped $150, landing at $1,590. EPS fell by $100 down to $1,625. All of this is on a CFR basis. But get this, the major surprise here is that freight rates have actually gone up. Normally, rising freight rates push landed prices higher, right? Not this time. Buyers here simply do not want to stock raw materials. Their insistence on purchasing strictly on a need basis is so intense that it has completely overpowered the increased shipping costs, dragging the overall price down massively. Meanwhile, over in the China bazaar, we're seeing a completely different kind of tension. There was actually a slight rise in feedstock costs. In a normal, healthy market, rising feedstock costs are almost immediately passed down the chain in the form of higher polymer prices. But here, there is absolutely zero improvement in demand to support a price hike. So spot prices are just stuck. General-purpose polystyrene is sitting at 8,250 yuan per metric ton, and HIPS is at 9,200 yuan. The stagnant demand is basically acting like a concrete ceiling, preventing prices from rising even when production costs start to inch up. Let's pivot to Section 4, our Indian bazaar deep dive. Let's zoom right in on India to analyze the local pulse. Converters here are being exceptionally careful, strongly preferring to buy raw materials only for their immediate day-to-day factory requirements. And why? Well, because the sales of their own finished products remain highly lackluster.
It's a chain reaction, right? If you can't sell your finished goods, your raw material buying mentality gets completely dampened. On top of that, there's absolutely no panic on the supply side. No supply issues at all, and retail operations have more than enough stock. Because of this sluggish environment, major local producers, like Supreme, have maintained their GPPS and HIPS prices completely unchanged, effective as of June 20th.
Finally, Section 5, our actionable purchase recommendation. Now, let's translate all of this regional data into immediate operational action. Let's start with this highly specific figure, $1,450 per metric ton. This is the assessed price for imported GPPS overseas offers for early July shipments on a CIF Nahava Sheva or Mundra basis. This number reflects a relatively firm overseas market sentiment when it comes to imports. But as we just discussed, this firm overseas offering stands in stark contrast to the incredibly sluggish local demand we're actually seeing on the ground. So the crucial takeaway is summed up perfectly in this direct quote from the PolymerBazaar report. We recommend no deviation from need-based procurement. Because local demand remains so sluggish and finished goods simply aren't moving fast enough, there is a highly probable scenario on the horizon. The local producer will likely feel the squeeze and choose to bring down its ex-works prices to stimulate buying. Therefore, stocking up right now at current prices is a risk you just don't need to take. Stick strictly to what your factory needs today. Now, if you're managing a supply chain, you'll probably want to dive into the raw data yourself. You can access this exact corporate market trends report straight from PolymerBazaar. Just head over to their website or reach out directly via the WhatsApp number to grab the full PDF report for your own internal planning.
And that brilliantly illustrates the current state of the global polystyrene market. Everyone is just standing still, buyers won't budge, and in many places, sellers are stubbornly trying to hold the line. But something has to give. So I want to leave you with this thought. With global supply chains collectively holding their breath and demand remaining so sluggish, when will local producers finally slash their prices deeply enough to break this stalemate? Keep a very close eye on your local ex-works prices in the coming days. Thanks for joining me for this explainer. Keep your focus sharp, and I'll catch you next time as we continue to decode the markets.